welcome back to, we had a little bit of an issue with the live stream, so we decided to pre-record, but no worries, we're still going to get this information out to you guys. Again, my name is Jay Carter. I am the CEO of the Carter Robinson Consulting Group and also the Diaspora Investor Club, where we work with average, everyday people, regular 9-to-5 people, and help them create a resource where they can pull funds together and invest in different areas, continents, countries. That's what we do. Today, I have someone on the line, which I'm extremely excited to talk about, because one of the most popular issues that come up when we're talking about investing is what's the difference between group investing, private investing, and hedge fund and things like that. We typically don't focus on the larger scale, like hedge fund or private investing as is known on a corporate level. We don't do that. We just mainly focus on working with everyday group investors. But I wanted to bring people on here. That can educate you on both aspects. And also, Mr. Ivan is actually in Ghana, so he provides a very, very needed perspective for U.S.-based investors. And so he's deep into the private investing. He does corporate level private investing. And do you work with hedge funds?
No, it's more about corporate finance. So
corporate finance and advisory.
Yes. Yeah, investment banking related.
Okay, so I definitely want to get to know you a little bit more and then start to get into the juicy stuff. So how, just to start, can you just introduce yourself to us and tell us a little bit more about you, and then also how do you get into your field that you're in right now?
All right, so thank you very much, Jay. As you already said, I'm Ivan Osefriye, and I'm from Ghana. I am an investment banker focusing on corporate finance and advisory. And so what we do is we help corporations raise funds through whether equity or debt. And also there's also the M&A aspect of it, where companies who want to merge, we help them or we advise them on the right approach to go about to be able to merge to become a company so that they can achieve their strategic objectives. And so basically that's what I do. So raising debt, and also there's the equity aspect of my line of work. So that's a brief introduction about myself and what I do.
So how did you get into all of that technical stuff?
Right. So I have an interesting story to that. So when I was in the university, when I was in uni, I didn't really do finance related major. I did business administration, but I didn't major in finance. And so along the line, I felt in love with finance, and there are certain occasions that I even had to sit in finance classes to learn what they were being taught because of my passion for finance. And after school, I followed it up to pursue my master's in industrial finance and investments, to have a direct knowledge from the finance bit, and specifically towards the high finance, so investment banking, private equity. That was where my interest was. And so after the master's program, I was able to make a pivot into investment banking. And I currently work for DataBank Group in Ghana, where it's an investment banking firm and also has the asset management firm. And I am with the brokerage side, where, as I already said, we work with the corporate funds or corporate entities to be able to raise debt and equity. And so basically that is how I got into my profession straight from uni and my transition into investment banking. So in summary, that is what I would say about how I got into my profession.
So you really basically have to love numbers.
Yeah, I do. I do love numbers. And I like to solve problems as well. So that is why I'm in investment banking and help corporates to solve problems. So basically, companies get into, I wouldn't say issues or problems, but they get into certain situations and they call on the investment markets to help them strategize or help them to be able to reach that strategic goal. So whether it's debt or whether it's equity or whether it's M&A, that is where I come in.
So basically your job is to help them find the money to build them out of whatever situation.
Exactly. That's what I do.
Yes. So yeah, I mean, it's so funny because when we're kind of group investing, there's what you do is also more management too, like managing assets and stuff like that. We kind of do everything in-house and may have a manager, but there's no hedge fund or no specified manager who's managing all those assets. We're like doing it as a group. I actually see the benefit of having somebody else do that. Like when we need more money, I want somebody else to help us find the money.
Yeah, that would do with your line of work, getting into or starting up or making it a corporate or a business with a well-regulated governance body where you are the founder yourself, where you have a well-structured organizational structure. It also helps with the confidence, and people know that, okay, I am giving my money to a reliable company who is going to invest on my behalf. And so that is what I would say. That's moving on. That is something that I would say you need to consider in the future.
Yeah, getting corporate, but it's so much red tape. It's so much red tape in getting corporate. So much red tape. And then you have to pay people too. Legal. Yeah. It's a lot of people you have to pay. So our audience is typically US based. So we do have a lot of investors that are in the United States mostly. And they're just regular people. They're just regular working class people that may have jobs and some type of savings and just want to, figure out different ways of diaspora capital, or people coming from the diaspora from the US and trying to, buy properties over there or invest into projects like hotels or apartment complexes.
So with this, what I'll start from is the group of investors would have to, first of all, do their due diligence, make sure that they do their proper vetting to know what they are getting into, the right assets, the returns. There's some work that needs to go into it. And also they need to know the regulations around those countries and how real estate is structured in those countries. You said you work in America, and if you want to invest in Ghana, there are certain rules you need to know, or certain regulations that you need to be accustomed with, our tax laws, and how to even acquire land, and all those things are things that you need to consider. And also with private equity, you need a general partner or a sponsor. And this person is going to be the one who is going to source the transactions of the deals, know how to manage it and how to structure it. And so considering that you live in America and you're in a diaspora, you need a trusted person that you can trust. That I'm not in Ghana, but this is someone that I can trust and can be able to source the transaction, can identify a potential investment that I'll be interested in. And I can share that with my investing club. And the hotels example you gave is a great investment to make. And in fact, I see those investments as high premium investments because, when you're investing in hotels, you're able to get some sort of returns through whether rent or even potential exits where you sell the assets to another party. So basically, that's what I'll say about diaspora investors considering international investments. And so, in summary, you need to vet whoever is going to make the investment on your behalf. You need to do your due diligence. You need to know the regulations around that, the regulations in the country, and you also need to know the kind of investments you're making, the kind of real estate you're getting into, whether hotels, whether malls, whether residential. You need to have an understanding of these asset classes before you get into it.
Yes, definitely having so I'm the kind of person that when it comes to investing, I spend time getting to know people, but then I connect with the right people who can do all of the extra stuff. I don't spend too much time on the research. I just hire the right people to put around me so that they can do that work, like the legal team, the surveyors, the realtors that's sending me land, and everything else in between. So, but how if my investors didn't have this club with these resources and these people on the ground, and they were looking to just go off on their own, how would they establish a relationship with somebody like you, or someone like a lawyer, a trusted lawyer out there? Or, land could be tricky. Definitely could be tricky. If you don't know, if you're just going out there without any plan.
So what I will recommend is a formal structure. And so what I mean by a formal structure is you can go through a registered company, and basically that's how private equity works. So the investment is done through a company. So the company takes up the money and make the investment on behalf of the individuals, because it's a pool of funds, and that is where the group investments has an upper hand over the traditional investing, where it's just an individual going for the investments. And so this is a pool of funds. And so you need to get to know companies that are specialized in investing in real estate businesses, and you know that they are verifiable, have a website. You can get to know some of their investments, get to know their track record. All these things helps in the checks and the due diligence of getting into the investment. So then again, what I will say is you can do that through a registered company that can prove that they are into the real estate businesses. They have investments to show, or they have projects they can show you. So yeah, basically that's what I would say. Go through a registered business, and that's the safer way.
Just basically do your homework on who is legit, and then also call around. I feel like, but the biggest thing is you have to go there. You have to. To me, I can't invest anywhere that I haven't been before. I have to go there and kind of see the lay of the land. And anybody that I'm doing business with, I have to eat with them first. We have to eat. We have to break bread together, and kind of, you have to have that level of trust, especially being this kind of distance. You have to have that level of trust, especially with that amount of money. So how do you? I'm gonna have to edit. So I have a list of questions, but again, for time purposes, I don't want to go into all of the questions I have, but I do want to get the juiciest questions so that we have some good content from this. So that's pretty much it. But so there's a perception about private equity that is pretty boring. It's all about, it's boring to people that like you that do the work. It's probably more exciting for the people that's, reaping the benefits. But it's really all about spreadsheets, numbers, making a lot of phone calls and finding the money. What's the human side of that? Like, what is is it just the people that reap the benefits, or the people that's smiling at the end of the day? Or you really just have to be a human computer, or a human, technical person?
Well, working in finance, private equity investment banking is human related than you can think of. I'm sure that you have this perception because you're outside of it, but when you're inside, you get to know that we have a lot of contact with our clients. So we are always usually on calls, getting to understand the issues of the clients, and making sure that we're able to put together the right solutions to be able to solve the problem of the clients. So we are back-to-back calls. We are doing our due diligence of the companies, and sometimes we even go to the offices of these clients to be able to understand their line of work and what we can do to help them. And so we have that human or that interaction with the rest of the world or with our clients. It's not just about spreadsheets and numbers. And that aspect is there, but you need to understand the business. You need to understand the perspective of the managers or the leaders of the company to be able to put that into numbers to be able to solve the problem of the client. And so there's that human relationship with our clients and getting to know people and what we can do to help them. So it's not just about spreadsheets, like you said.
Yes. And I think that might be, so your company, is it solely with a lot of, let's say, business owners or corporations within the continent, or is it also just internationally everywhere?
Internationally everywhere. We don't limit ourselves to just Ghana or Africa. There's a lot of opportunities outside Ghana as well. And our doors are always open to solve any problem. That is what we are. That's why we are here for, to solve problems for people.
Okay. Because I was going to say that's kind of one of the, I feel like a cultural, well, for me, because I remember the first time I came to Ghana, I'm very to the point, especially when it comes to business. I'm very direct and I'm very to the point. I don't necessarily want to talk about pleasantries or how are you or things like that. When I see you, when we open the door and we start to break bread, I'm talking about numbers or, okay, what's the plan for this? And I didn't know that was rude, but that's that's in my culture.
Yeah.
That's what I was. Yeah, in
Ghana is a very sociable community. There's this sense of communism in Ghana where everybody says hi to everybody. Everybody wants to offer a helping hand to everybody. So there's that sense of unity here. And even before we even go ahead to speak about business, we exchange pleasantries. And so I think that might have been a cultural shock to you, but that's how that is how we live in Ghana.
Yes, I've adjusted now, but before I'm just like, okay, even when I start my conversations is okay, so this is what we're doing, and it's like, whoa, hold on, hi, how are you?
Yeah.
How have you been? I'm like, why are we wasting time? Let's get down to business. So
let's get to business.
So that's definitely I'm learning is the culture here is just straight to business, no time for mercy.
Yeah.
So working with you, well, you said your company works internationally everywhere, and you're absolutely right. There's opportunities everywhere. And so it doesn't make sense to limit yourself to one country or one continent 100%. But because my people right now are primarily US based, when you work with people from the US, are there like any type of American investor habits or like red flags that you guys like, oh my God, this is a US person. Like, what does that look like?
So what I'll say is with this profession, you need to be accommodating to different people from different cultures. You need to be able to understand why this person is acting this way or saying this. And we understand how business-oriented American people are. And in fact, investment banking came from America, so we understand how to do business with especially Americans. So we try to understand your perspective, why we are raising certain issues, and know how we can provide the help or the solutions to be able to make an impact onto your company. And so we look at the impact first before anything else. How the person relates to people is not something that we really pay attention to, but it's more about delivering what we need to do and making sure that the client is happy with the kind of work we did for them. And that is our focus.
And that pretty much is all it boils down to, especially coming from a perspective of serving. It's really all about the clients and
all about
just finding a solution for them.
Yeah.
So I want to, like, I understand your perspective, but I also want to kind of hone in again on so what we do, like I said, is not, we don't consider it to be corporate. We're very just much individual people that's just doing things individually. But if we with the Diaspora Investor Club wanted, like, if I did want to come to Ghana, establish a corporation down there, and not do things kind of like an individual, but more so do things like a corporation. How would we partner together to kind of allow my group of people kind of, I don't know, make like a bigger splash down there? Because now we have one project that we're working on, and we're looking at other projects. How could we grow by like kind of utilizing a service like yours?
So more like, if I want to try and understand your question. So more like getting some advisory services from what we do. Is that what you want to understand?
Yes. If we stop doing things kind of DIY, like stop doing things like a group of individuals, and said, okay, we want to hire a company to help us manage this and maybe get us more money or help us find solutions to the problems that we have. How would that look? So us partner with an asset management company?
Right. So first of all, you need to set up a company, and whatever you are doing should be structured and should go under a legal entity, so that we know that this company is separate from J and the Diaspora Investors Club, and it's an entity on its own, where we can know the kind of approach to be able to help the company reach their objectives. And so after the company is set up and we understand what you want to do, the next thing that we do is to have engagements, get to understand what you need to do. And so you give us a mandate and we execute the mandate, and it becomes more like a contract between your company, right now, not the Diaspora Investors Club, but whatever company and what you decide to name it, and between DataBank Group or whatever entity it is. And so there's a mandate agreement that is signed, which is binding on both parties, with certain deliverables stated, and how we are going to execute the transaction. And when the mandate agreement is signed, we get onto work to understand the issue, approach certain investors that we need to approach, because we are more like the intermediary between the company and the investors. So we help the company to be able to raise funds, and so we come in more like advisors and arrangers. So we arrange the transaction, how it's supposed to be structured, giving investors comfort, and basically that is what we do. We get in the necessary documents, or the necessary documents from the regulatory authorities or regulatory bodies to make sure that everything is in compliance. We also help you appoint other legal advisors and also reporting accountants that are going to also do their due diligence on the company, to be able to give investors that comfort that this is a company that I can trust and invest in. So basically that's what we do. So in summary, what we do is, after the mandate is executed, we help you to also identify legal advisors to be able to structure certain documentation for you, reporting accountant as well, who's also going to analyze the company and their cash flows and all of that. And we are going to be the intermediaries between yourself and the investors. So we are going to sell your story. We are going to create your story, sell it to convince investors that this is a company that you need to invest in, and you are going to get some decent returns if you invest in this company. So that is what we do.
So that would make sense once we're done the project and there's some cash flow from that specific project, because we have everything else, the structure, the foundation, all of that is already set up, but the project is not finished yet. So it will make more sense, right, once we start cash flowing from that project, so that we can show future investors what we've already been accomplishing. This is how we look. Now give us some money so we can do some more. Okay.
So that they could get some confidence in you that should we lend, JN her company some money, they can be able to be paid back.
Makes sense. Makes sense. Makes sense. Makes sense. So what is the fee that your company charges to help this? Is it a percentage or a flat fee or a fee-based system?
Actually, it varies, and I wouldn't want to focus on my company so much because there is a structure that the company deals with or uses. I'm just an employee of the company, and so should the company be set up, the necessary procedures will be followed, and we'll analyze the amount we want to raise and be able to know how much we are going to charge. And so the fees that are charged vary from, it varies depending on how much you're raising, and also other factors that needs to be considered.
And so we are getting to the end of this interview. I hope that I asked enough questions where we got enough information, but if you have anything else that you feel like we should talk about, what do you think?
Yeah, I think I'm enjoying the questions so far, but one thing that I would also want to talk about is the difference between, more like a difference between the group investing or private equity investing versus the traditional investing. And so because your business is on the group investing side, I would want to bring certain distinctions between the two. So a group investing is more about pulling resources together to assess more profitable real estate deals. And so the group investing allows participants to own a portion of a larger stake or a deal. So group investing gives the individuals the opportunity to own a stake in the overall deal. So risk is shared, it's more collaborative, and the group can also able to invest in scalable properties. As I already said, it is preferred, or it gives more confidence when it's structured as a company, but it can also be done as a syndicate. And what I mean by a syndicate is what you are currently doing. You pull funds together and you invest in a certain project. That is a bit more informal compared to setting up a company, which makes it more formal. Yeah, so investors can also contribute relatively smaller amounts compared to when they were investing on their own. So when you're investing on your own, you will need to be able to raise a lot of cash to be able to make certain investments, and but sometimes you may not even have the ability to be able to raise all that money. But group investing gives you the opportunity to be able to put certain funds together and be able to invest in certain profitable businesses, and the risk is also shared and it's not concentrated like the traditional or when a single individual is investing in a project. And so I would say that is more of a distinction between the group investing and the traditional investing.
Absolutely, 100%. And I think for our project specifically, I think that was the attraction, just because if we're looking at the large numbers for how much money we actually needed to raise in order to start, it would have been overwhelming for anybody, any normal, because our thing is just normal people, just regular people. But because people were able to come in with like a minimum amount and still kind of get that little share of the cookie, that little crumb of the cookie, it was, it allowed for more people to have access until we get, until they are able to reap some, grow some, and then get into bigger projects. So I think definitely when we're comparing it to, when we're talking about, bigger corporate structures, that's intimidating for a lot of brand new people. So definitely I like what we're doing, but the end goal is definitely to get to the larger scale once we have that first few projects up and running, and then we can separate that completely from just a club to more of a corporation and then grow
Mm.
from there. So I think it's a stepping stone. It's
Mm.
like a stepping stone.
Yeah. And another thing that I will want us to discuss is how people's money could be protected. They're trying to give people confidence that, okay, my investment is secure. And so what I would say on that is investor protection starts with a structure. And so there should be some formal or legal agreements, and that spells out their capital commitment. So you know how much you're investing, you know how much profit is going to be distributed to you, you know the decision-making process. Ideally, the funds that has been pulled should be in an escrow account. So what I mean by an escrow account is an account that is set up mainly for a specific purpose and cannot be accessed to embark on any different agenda or take up other opportunities. So transparency also comes from regular reporting. So you need to have access to the financial records, and even if necessary, have third-party audits where possible. And this comes in when the company is set up and it's in operation. You can have auditors look through their books, and this provides investors some sort of comfort and know that their money is in safe hands, and they are definitely going to reap their investments in the near future when the general partner or the sponsor is exiting from the private equity transaction, or they can be able to also get some proceeds from the rents that are coming in.
Yeah.
So basically, that is what I would say when it comes to transparency in doing real estate businesses.
That's definitely 100% important, because nobody wants to invest money without any type of at least plan on what is going to be my return on investment. Even if I just put $2 in there, I want to know that I'm going to be making at least $4 to $6 back. So and so even in a group investing situation, you still have to have that transparency. You have to have those meetings. You have to have that, you have to have an accountant. That's just a lawyer, an accountant, everything. You still have to do all those things. So 100%. 100%. And that's the difference between doing everything by yourself too, because you don't have to do any of that. You could just wing it. But
and setting up a company, you don't necessarily need a big team. You can start with a team of 5 people. Just responsibilities and roles are properly aligned, and they each and every person in the team knows what they are doing. And so you don't necessarily need a big team to be able to start a company. You can start very small. You just need to follow the regulations and all the necessary legalities around setting up a company.
You just have the right people around you is how you start. Just having the right people around you. But I think the importance for us in this conversation is realizing who is the right people that you need to have around you. So we because working with you might be intimidating because you're working at a company that does high level corporate stuff. But if it was just a person, not even somebody from my club, but just like a regular person on their own, who are the top 5 people that they should have in order to make a semi-sound investment for their first, let's say they just want to build their own mini hotel, like a small hotel there, or hostel or something.
So more like a group investing, but you want to more of
if it was just, let's say it was just me, like if it was just me and I have never invested in any country outside of the United States, and I'm looking to start my team for just me, who are the 5 people that I should seek to have on my team?
First, I would say you need to get a lawyer to be able to understand certain regulations around real estate investing. Obviously, the laws in Ghana will be different from that of the United States, and so you would need a lawyer in Ghana who's also going to help you understand the necessary legalities around even acquiring land and how to start your property and understanding the real estate laws in Ghana. Two is somebody that can also help you identify the right projects to invest in and to be able to help you get the right value. You know that this project can be valued at this price, and so somebody who's going to put some value on a project based on
Was
the
that a
location,
real
based
estate
on-
agent or a broker or a company? What
Yeah,
does
that
that
could
person look
be
like?
that could be a consultant, an individual just with knowledge with valuation or helping you value the property and selling it at a decent price. You don't necessarily need a company to do that since you are starting as an individual. So if you can get a person who could be trusted and be able to do some sound valuation for you to be able to determine the price, the right price or the fair price to be able to sell your property. That will be the second person I would mention. And also the third person, it will be somebody who can help you raise funds if you don't have all the funds alone.
Mm-hmm.
Somebody who's going to help you raise funds, even if you will need to put something together to approach your people back home to let them know the opportunity you've identified in Ghana. Somebody who can properly narrate the story and know what to say, know how to present those details to the people back home.
Mm-hmm.
That's I'll recommend to you as well. And the fourth person will be a realtor, since they are usually in Ghana and they are also privy to certain properties that may need certain buyers, so they can link to other properties, especially some properties that are in prime areas, but the valuation is a bit low, or it's not. Yeah, the valuation is a bit low, and you can get it at an affordable price, and you can make some decent profits out of it. And the last person I would say is somebody you can trust. That's okay. When I'm not around, this person can take care of this, of what I have started. Somebody, so more like a trustee, somebody you can trust. That's okay. When I'm not around, this person is going to make sure that my back is covered. So these are the 5 people that I recommend to you.
But wouldn't a trustee be a lawyer? Should be.
So the lawyer would have other engagements or other responsibilities that they would need to take care of. The trustee can be somebody who is dedicated to making sure that they got your back and your company is in safe hands.
Mm-hmm.
Or
so an advisor, basically.
Yeah. Or it could even be some sort of real estate company that manages the property on your behalf. So they manage whether it's rent, they manage the rent, they make sure that the property is well kept and looks appealing to better suitors. So basically, they are 2 different people. The trustee or the person you are entrusting your property in their hands will be different from the lawyer.
I like the point you made about raising funds, because I was going to counter that point about having somebody to help you raise funds. And I was like, so people just will give to a random person that has a hope and a dream. But I like the point that you made about, using your current network, and maybe that person could just guide you on how you can put together a pitch deck for your mom and dad, or your colleagues, or people that and that can help you do those initial things, because it does get expensive. It's not easy. It gets expensive, and that's not even something here. So here we use. So a lot of my people use the equity that they have in their house. So basically they leverage credit, and that's a lot. That's what we do a lot here, is leverage credit. And that right there is a gem, because these things get really expensive. And a lot of people don't have just, 50, $70,000 or more laying around waiting for the next investment.
Yeah.
But leveraging real estate. So I know there's financing opportunities out there, but it's not the same that it is here in the US. Like this, it's not as common to just turn your house into a credit card and use it that way. Do you see it done still out there, like leveraging the first asset on some type of financing to get the second asset?
Yeah, that could be done. So you are more of saying a collateralization of your first property. Yes, that could be done. You could approach certain financial institutions and let them know what you want to do, and they can put a value on your assets and be able to give you the necessary funds you need to do. You need to invest in your second project, provided you can be able to raise the money and pay them back. You can do that. That is like I said.
So you said we have to raise the money to pay them back, so they wouldn't take like a 30-year plan, like a 30-year payment plan from the profits.
So I want to understand the question. So is it more of using your assets more of a collateral, or trying to get a partner and promising them that should they give you this amount of money to do your investment or to make your investment, this is how much they are going to get in return? I want to get your question properly.
Literally is both things. So here we call it cash out refinance, which I know is an option everywhere. But let's say I had a piece of real estate, like especially an income producing piece of real estate, like a hotel, and I don't have the money, but I want to start another hotel. I can literally go to the bank and say, I have this piece of real estate that's generating this amount of money. I need X, and this is how much it's worth. And in the next 10, 20 years, this is our projected ROI. They're going to take that projection and give me a certain amount of money, probably enough that I need. And I probably just have to raise a little bit more money to fully fund the next project. But their collateral is they put me on a payment plan for, let's say, 15, 20 years and with interest. And the collateral is, okay, you cannot pay me back. I'm just going to take the first hotel. And that's pretty much it. But I'm not raising money to pay them back within a shorter time frame than maybe 20 to 30 years or more.
So there will be such arrangements like that. I mean, when I was explaining my points, I touched on that, but you are bringing in the aspect of the tenor or the longevity or the timelines at which you are supposed to pay back. And what I would say to that is there's an arrangement with that. You just need to sit with your bankers and let them know and understand your business and what you're doing and what you're going to do to pay them back. So it's more about sitting with your bankers, explaining to them the return, just like what you said, the ROI of your assets, and why you need to invest in a second project, and for them to understand the numbers and make meaning out of it. They can give you the necessary funds you need to invest in your project with favorable timelines as well. So that can be done.
It makes sense. Usually money talks. So anything can be done when you have the numbers correct. If the numbers look good, usually anything can be done. So I'm pretty sure that can be done.
Okay. And when the numbers look good too, you stand the chance of getting the bank facility at a relatively cheaper price, and because they know that there's some certainty of them getting their money back. There's not so much risk in them giving you the facility to invest in the second project.
So are you meaning like you can borrow the money for cheaper as far as the interest rate? If the numbers look good enough, you can negotiate. Yeah,
you can negotiate for your interest rates.
You're putting ideas. Okay.
Yeah.
And that's also something that your company would help advise on too, just helping us meet with different banks, right?
So what we typically do is we help you have access to the markets directly. So we don't usually go through banks. So banks could invest, but we don't raise the money directly from them. So what we do is pension funds, people who are looking for alternative investments, and they see your company as a decent company that could give them some good returns, they can invest in your company. So some pension funds who are seeking to invest in the long term for their clients, some insurance companies. And so those are typically the companies or the people that we would approach for them to invest in your company. We are not going to approach banks to give you loans, but we are going to connect you directly to investors that need to put their money somewhere to be able to get some benefit or some interest in future. So that is what we do.
Sounds good. So if you had any advice for a member of my club who was thinking about investing either with us or by themselves, and just coming from all of the stuff that you see on a day-to-day, just working the business and seeing how money runs through these businesses, what would you tell them to prepare them mentally for the journey of maybe growing money, investments, the good, the bad, the ugly, the surprises? What would you do? What would you tell them?
So this is what I would say. What I would say is the person, depending on the mindset of the person would have to have some shift in mindset. And this is what I mean. So the person would have to be able to consider, or it's best for the person to consider the group investing. That is what I would advise for. The reason why I'm saying that the group investing will help you pull some funds together and be able to invest in a project. Especially people don't really like to, this I will say, people like to own 100% of a small piece. But when you are investing as a team and you even own 10% of a larger piece, you're going to get some sort of benefit or some sort of better returns compared to you going solo to invest in a project. And so that kind of mindset shift is what I'm going to tell the individual. That kind of advice is what I'm going to tell the individual. It's fine investing on your own, but sometimes we need to also look at the bigger picture. Okay, should I invest in a group or should I invest with a group? This is the kind of project we can invest in. And there are a lot of premium projects or assets that they are sometimes are very hard for individuals to take up. So you mentioned the hotels, you mentioned hotels already. They are also malls. Malls, they are also office spaces. These are all big projects that they are usually hard for individuals to take up. And so going the group investment route is something that I advise. And also it's also comes with a relatively lower risk compared to investing alone. So the mindset shift, having the mindset to embrace the group investing, trying to diversify your risk and trying to diversify your assets, because the group investment wouldn't just invest in a single asset, but multiple assets. And at the end of the day, it's going to benefit the investor. So that's the advice that I'm going to give to the person, that the person will have to have a mindset shift if they are just focusing on what they are going to get or what they are going to do individually. They can also consider the group investing route.
Yeah. And then also just taking time. These things, it takes time. Nobody's an expert as soon as they start. And you just save yourself a lot of money and a lot of stress. Going in with a group, like you said, it's less liability for you because as a group, we still have to have certain structures. We still have to have legal, the accounting, the financials, transparency, those things set up. But it's kind of like we win together, we lose together, but we all learned a lesson. So I think just for any kind of investing, especially with bigger like real estate related, I think group investing is the perfect place to start. And then once you get a certain amount of information, then you can start growing off and having your own projects and, leveraging the relationships. Because also you get bragging rights. You can say, oh yeah, I'm one of the investors in this over there, and I'm one of the investors in this over there, when you really have maybe the smallest chunk
Exactly.
of equity, but you still have your name as listed as one of the investors. So, there's a lot of things. Like you said, mindset is everything. Being patient, not trying to rush success, just taking it step by step and being willing to learn. Very important. Very important.
Yeah.
So I do think that's all I have. I really appreciate you coming on. I know there's a huge time difference between us, so it's really late for you right now. I'm appreciative of you coming on. It's 12
a.m.
a.m.
12 a.m. Yeah, 7 a.m.
Wow. So you should get some sleep. So you should get some rest. But this information, it will be recorded. I'll be able to give you some clips just in case you wanted to use it to market. I will be marketing this on the platforms we were supposed to stream on. And I am coming to Ghana for an event in July, I think. I would love to meet up with you, maybe break bread, so that when we have that future, when this project is finished and we want to go ahead and start leveraging bigger opportunities, maybe that's something that we can work on together.
All right, I'll be expecting you.
All right, I'm coming. Okay.
Ghana is it's a great country, especially in December. I don't know if you've been to Ghana in December before.
I've never been to the hype of December. I actually choose not to go in December.
Do you have a reason? Do you have any particular reason for that?
It's busy. It's a lot going on. Prices are higher.
But I always say December, Ghana is the best location, or is the best place to be in December, because a lot of people come from their diaspora trying to get to know their ancestry. They are trying to trace where they come from. People are also having fun. People are also having a good time. And so depending on your personality, I don't know if you are more of an outgoing person, the person who likes to have fun or party. I don't know if that's the kind of person you are, but if that's the kind of person you are, and I'm sure that you will enjoy December in Ghana.
Yeah, I think maybe I was thinking about doing a tour down there, maybe like in December. I was thinking about it because I'm not that type. I don't want to be. I will be asleep very early. I wouldn't be out there doing the whole thing. I think it is important, especially if you're looking to invest in Ghana, to see it in December, so that you can see, especially if you're in the hospitality, this is the best month in hospitality. Exactly. So I get it.
And I see a lot of opportunities in Ghana, especially in the real estate space. Urbanization is increasing. As we speak, close to about 70% of the population are living in urban areas, but there's still some gaps in housing. And so these are some opportunities that people can take, especially in the middle income space, where they need some sort of affordable, not so much expensive houses to get. These are opportunities that are available in Ghana. So Ghana is definitely a great place to invest for real estate.
It is. And what you just said is something that we were talking about in a prior meeting, because of course everybody's going down there making these very luxury, expensive places priced in USD. And there's a huge opportunity being missed, because yes, luxury, everybody likes luxury. but those people are not necessarily moving to Ghana though. You know,
Mhm.
they're going there, they're making the Airbnbs or, you know, the shortlets, but what about the people who live there?
Mm.
So that's something that we were talking about for the next project. You know, so yeah, we definitely have a lot to talk about.
I'll be expecting you in Ghana in June. You said July or June?
July, I believe it's July. I believe it's July 10th that I have to be there.
All right. I'll be
I'll be
expecting you.
there. But thank you so much for riding along, staying up, and really seeing this meeting through. I appreciate you. Thank you.
Welcome. All right. Bye.
Have a great morning.
Yeah, enjoy your time too.